Good afternoon. Welcome to the United Methodist Personal Investment Plan webinar. While we are waiting for the others to attend, please stay on the line and we will be with you shortly. Good afternoon. This is the United Methodist Personal Investment Plan webinar. We are still waiting for others to arrive, so please, we appreciate your patience while we wait another minute or two. All right, we're going to go ahead and get started. So welcome to our UMPIP webinar to achieve your retirement goals. Today's topic is focused on the United Methodist Personal Investment Plan. I am Cheryl Hatcher, a team member of Wespath Benefits Plans Department. It is my pleasure to moderate this webinar. Please note that we will be recording this webinar and I will be keeping everyone on mute. As soon as the link to the recording is available, I will be sending it out to you via email. Due to the amount of information that will be imparted to this large group of people within the next hour, we will answer as many questions as possible that are added in the questions pane at the end of the webinar. Otherwise, the Participant Solutions Center is always available to answer any specific questions relating to your particular situations, as well as one-on-one benefit education consultations. Now to get started with the webinar, it is my honor to introduce you to today's distinguished speakers. All of them are thoughtful and knowledgeable employees of Wespath who take pride in helping United Methodist clergy and laity understand the intricacies of the benefit plans they have through Wespath. Your incredible team consists of benefit educators Todd Creviston from Montgomery, Illinois, Frank O'Brien from Long Island, New York, as well as the manager of benefit education, Robert Christoffel, who is also from Long Island, New York. Please bear with us with this technology while we switched amongst presenters. It is now my pleasure to turn this presentation over to Todd Christoffel.
Todd, there you go. I'm Frank, and I am going to be kicking off the webinar today. Todd and I are going to be partnering up on the webinar. I'm just going to introduce what we're doing this year. and then Todd will kick us off, and then I'll come back in for the latter half of the presentation. This year we came up with a new idea, as opposed to having quarterly UMPIP webinars where it was in essence the same type of overview of UMPIP. What we have decided to do this year is actually have a series. It's all 4 quarters of this year we will talk about UMPIP. For today, we're going to provide an overview of what UMPIP is. So it's very similar to what you may have heard in the past. And the agenda Todd's about to review looks very similar to the slide you are seeing now. So we're going to talk about today about what UMPIP is and hit on all of the key points: accounts, funds, distribution options, services. But as the year goes on, each quarter we're going to focus more on one aspect of UMPIP. So in June, we're going to unpack, if you will, or do a deeper dive, how you like to think about these things, around the savings and investment aspects of UMPIP and retirement plans in general. So we'll go into deeper detail around the accounts that are available to you before tax, Roth, after tax, and such. You're going to hear about the funds today. We're going to talk deeper about the funds and expand a little bit more about the Wespath investment funds that are available to you, as well as the life stage investment management program that is available to you. And we're hoping to have a special guest, not confirmed yet, from our investment side of the house that will come in and help us out with that particular webinar. In September, we're going to talk about ways in which you can manage your account. It's kind of like a life happens type of thing. You're in the account for a period of time, and you may need to access your accounts, for something good or bad that may happen, in your life. And so we'll talk about how you can go about do that in greater detail: distributions, loans while you're in service or in ministry, distributions while you are in retirement. So we'll continue to break that out for you as well. And then we're going to tie it all together in the 4th quarter, where we're going to talk about holistic household family financial planning. So you're going to hear about EY today and probably throughout the series this year. But we're going to go into different ways of thinking about how you can plan for strategically and tactically getting to and through retirement. So we're hoping that those of you who are with us today will continue to keep your eye out for announcements when we can solidify the dates for each one of these additional quarterly webinars, and join us each and every time so that you can hear us expand more about the opportunities that you have within UMPIP. I will proceed to talk a little bit about Wespath, kind of remind us about who we are. So right there at the bottom, foundationally, Wespath, caring for those who serve by providing investment and benefit services to one of the mission and principles of the United Methodist Church. That's who we are. We are an agency of the UMC, and we are committed each and every day to provide those benefits and services for each of you. We have been around for a long time. We're north of 115 years, I believe. We're very large. We're the largest reporting pension board in the world. When this slide was put together, we had $27 billion in assets under management. Markets move every day. That could be a little higher, that could be a little lower, but you can see that from that, we are a large financial organization with a large economy of scale, which helps us provide the benefits for all of us that participate in Wespath plans and programs. We are a not-for-profit organization. No one is getting any sort of commissions or payouts or stockholders or shareholders. Everything that we have after we've paid our bills stays where they should within the Wespath funds. We service over 100,000 participants, all of you, myself, the team that you just got introduced to, clergy persons, lay employees, churches, annual conferences, plan sponsors that they may have extension ministries involved in terms of ministries out in the community that you can participate in. We provide these benefits and services for a full range of participants within Wespath. So that's a brief introduction of what we're hoping to accomplish this year, and we hope you participate with us, and any feedback you have throughout the year is would be good to receive from you. And now you know a little about Wespath, and now Todd will take us through today's agenda, and I'll come back on in a little while. Thank you.
Thank you, Frank. Hello, everyone. So as Frank alluded to, today's agenda is we think it provides a nice overview of all 4 areas that we're going to end up diving deeper into in each presentation the following quarters. So today we'll define what UMPIP is. We'll talk about employer contributions, participant contributions, Investment options will provide an overview of the funds and the funds that you can invest in, and also how you can invest. So if that's self-managed, so that means that you're selecting your funds, or you select life stage investment management. We'll talk a little bit about what distributions look like before retirement, so an active service, and then also distributions in retirement. And then we'll conclude today with what the participant experience looks like. And there's no shortage of resources, whether it's contacting participant solutions, or talking to EY, or registering for a one-on-one consultation, which you might want to do that so that we can help you brainstorm additional questions when you call EY, and you can really begin to put a solid financial plan together. So UMPIP is called a defined contribution plan, or sometimes you'll hear it called a DC plan. And all that means is that the government defines who can contribute and how much can be contributed each year. UMPIP accepts both contributions from participants and employers, okay? The participant decides how much to contribute from your paycheck, and you can select the funds select the funds to have those contributions allocated to. Okay, so it's defined and regulated by the government, by the IRS. Another term that's important to understand is vesting, and vesting equals ownership. I think that's a pretty easy way to define vesting, and I love how it has that equal mark in there, or that equal sign. And we wanted to let you know that your contributions are always 100% vested, meaning that you always own 100% of your contributions. Employer contributions may have a vesting schedule, which means each person will vest or own a certain percentage of their employer contributions over time until you're 100% vested. Now let's talk about participant contributions. We said it was a DC plan. So the defined contribution is you can decide how much to contribute. You can contribute a dollar amount, like $25, $50, $100 per paycheck, or you can contribute a percentage, like 1% or 5% or 10%. You can choose how much you would like to contribute. That's completely up to you. We know that Social Security won't be enough when you retire, or when we all retire, so contributing to a pension plan is important. Contributing to your UMPIP account can help you reach your retirement goals. You can also direct how to invest. So the first option is self-managed. That means that you select the funds that you want to invest in, and then you determine how your contributions from your paycheck are allocated across those funds that you selected. That works for some. It doesn't for me. I would prefer to have somebody else select those funds, and that's exactly what Life Stage Investment Management does. It places your account on autopilot, and you'll hear us say that a couple times today. So it will select the funds, it will select your allocation, and then it will actively manage that account over time. And I have a number of slides about Life Stage a little bit later in my presentation today. So in brief, there's 4 ways to contribute to your UMPIP account. A before tax contribution means that you avoid paying taxes now. An after tax contribution means that you pay your taxes and then you contribute to your UMPIP account. A Roth contribution is a form of after tax, so you've already paid your taxes on your contributions, but based on a couple parameters, you may avoid paying tax on those distributions later. And then we'll also cover rollovers. So your before tax contribution, that means that you're going to contribute to your UMPIP account before you pay taxes. Those contributions and those earnings grow tax deferred until you take a distribution in retirement, and then you'll pay taxes on that distribution. A before tax contribution is noteworthy because it'll actually lower the amount of money that you pay in taxes. So it's not a dollar for dollar reduction in your paycheck. If you contribute $100 a paycheck, you'll likely notice a difference of $85 or $90. It won't be a straight dollar for dollar reduction. And that's that tax savings that you'll see. I mentioned earlier a Roth contribution is a form of after tax. So that means that you pay your taxes now when you make your contribution. And then you could take tax-free earnings on those contributions and earnings, provided that your first contribution was begun or made 5 years prior to that withdrawal. So those contributions need to be at least 5 years old, and you must be 59.5 years of age or older, or permanently disabled or deceased. And in that case, it would transfer to your beneficiary. So a Roth contribution, the benefit education team can't determine if that's right for you. That's a great conversation to have with EY, and one that we recommend to our clergy and laity that we meet with, the consultations on a regular basis. You can also make a straight after-tax contribution. That means you've already paid your taxes on those earnings. Those contributions then grow tax deferred. You still get that benefit. And then when you take a distribution, you'll pay taxes on the earnings, but you won't pay taxes on your contributions because you've already paid those. And don't worry, Wespath will keep track of that for you. Okay, so the contribution limits. The IRS defines how much can be contributed each year, and this is a big number. So in 2021, you can contribute $19,500. If you're over 50, you can contribute another $6,500 for a total of $26,000. That's a big, big number. What we'd like you to consider is thinking about what you can reasonably afford and then contribute that. It's also important to note that you can create a plan to increase your contributions over time. Each year, my wife and I have a pact that if we get a raise, we increase our contributions to our respective plans. And I participate in UMPIP. So when I get a raise, I increase my percentage by 1%. That way, I don't even notice the money. I don't even notice the money not in my paycheck. And my wife does the same thing. And then you'll also notice over time that the IRS typically increases the future or increases the contribution limit for inflation, over time. The last way to contribute to UMPIP is through a rollover. So UMPIP accepts rollovers from a qualified plan. That you may have a retirement account like a 401k or a 403b from a prior employer, or you can even roll over a traditional IRA. So a couple of summers ago, I rolled over a prior employer's 401k, and it was really easy to do. All I needed to do was complete the incoming rollover form, and then I sent it to Wespath. Because I worked there, it was an easy delivery. Didn't require the mail. However, in a couple of weeks, my money from my prior employer's account was transferred to my Wespath account. That gave me peace of mind because I didn't need to look at multiple statements each quarter to see how I was doing. I didn't need to log into multiple websites to see how I was doing. Now I just log into my benefits access account and I'm able to check to see how I am doing. So to get started in UMPIP, you'd get an enrollment packet from your HR department. You'd complete that packet and then return it to your HR department. Once you're enrolled, the next step would be going to benefitsaccess.org to register, and then you're able to manage your account there. There's also a ton of information in Benefits Access and a And what I also do, I just go to wespath.org. Of course, I have that as a favorite on my web browser. I click on wespath.org, and then I click on retirement benefits, and then I'm able to log into my account. So you can get to benefits access by going to wespath.org. For me, that's an easy lift. So once you're enrolled and once you've registered, and you want to change your contributions, you would use the contribution election form. This form has a section for each type of contribution, and you can decide how to contribute, and then you could set a, whether it's a before tax, after tax basis. You can also set a dollar amount or a percentage of your paycheck to be contributed. So that form has all of that. You can change your contributions at any time. You would just remit that form to your church office or conference office. So the next step after enrolling in the program and registering at benefitsaccess.org would be to select your beneficiaries. And it's important to do this, and it's important to keep it updated. The beneficiaries that you have on file or registered with your benefits access account actually supersede your will. So if you have a will and you change it, make sure that your benefit
We seem to, either I or we are having technical issues right
beneficiaries.
now. Okay,
How about now, Frank?
you're good, Todd.
Thank you. So the beneficiary designation notifies Wespath of your wishes for distributing your account. Married individuals, your spouse is typically your primary beneficiary, and children are often listed as secondary beneficiaries. Excuse me. So let's talk a little bit about your investment options. So Wespath is a social responsible investor. Frank talked about that. The investments are made in accordance with the social principles of the United Methodist Church. Even with the social screens, Wespath has very competitive returns. Their low expense ratios probably are one of the best reasons to invest through Wespath. And there are no advertising expenses or commissions. So Wespath also works hard to uphold the values of the United Methodist Church through its investments and its work. And life stage investment management is also available as well. So now we'll talk a little bit about each of the types of funds, and I'll give a couple of facts about each one to kind of whet your appetite. There is more information on wespath.org should you not want to wait until we talk about the investments in great detail. But these are in order from conservative to more aggressive, and the first category is capital preservation, and the name of the fund is Stable Value. You could probably get a good idea of what the goal of that fund is. So the goal of that fund is safety. It invests in low-risk bonds. So think of your savings account or your money market account, okay? So the goal there is safety. The next category are income funds. These are bond funds. The goal is to pay you a higher income than the Stable Value Fund. And these funds are in order from conservative to more aggressive. Then these funds are huge. They're between $1 and $6 billion. So the goal of the income funds is to provide a higher level of income than the Stable Value Fund. The next category is called balanced. Sometimes they're made up of, stocks and bonds, and sometimes they're called growth and income funds. So the goal is to provide income from the bonds and then growth from the stocks. So it's actually meeting two goals. And you could see that this fund is made up of 4 different funds from Wespath. the U.S. Equity Fund, the International Equity Fund. Those are both stock funds. We'll talk about those in a second. And then the fixed income, that's a bond, and the Inflation Protection Fund are also bond funds. So growth in income, that's the goal of the balanced funds. So the next category is an equity fund. An equity means that there's ownership, so you own a stock. A bond fund or a bond is a debt income. That just means that you loan somebody money. So in this case, there's ownership. There's ownership in U.S. So the U.S. Equity Fund owns stocks of companies that are traded in the United States. And this fund is huge. It's made up of publicly traded companies that are small, medium, and large, and it's very diversified. I went to wespath.org, was looking at the investment information on this fund, and I accidentally clicked print on the PDF of all of the stocks that are owned. And I want to say that it was 40+ pages. So I caution you to not print that unless you have a lot of paper in your printer. The companies include Apple, Google, and many, many, many more. Coca-Cola. The International Fund invests in companies that are traded outside of the U.S., publicly traded companies outside of the U.S. So Europe, Asia, Australia, and it also is very diversified. So it includes companies that are small, medium, and large, and it is also a very, very large fund. The next category are the social values choice suite of funds, and these are for participants with a heightened focus on companies' environmental and social performance. To invest in these funds, you'll have to self-manage your account, and these funds also take into account the resolutions passed at annual conference. So this is just a graph to show the relationship between risk and return, or risk and reward, when we look at investments. Low risk typically means lower rates of return. What you get is safety in the case of the stable value fund. Over longer periods of time, higher risk funds provide higher rates of return, but on any given day, there could be a dip. So as you get closer to retirement, life stage investment management will actually shift your investment portfolio away from lots of stocks, lots of your account in the international equity and the U.S. equity, and shift it more into bonds for safety. So you might be wondering how you'll invest with Wespath. And this slide shows 3 basic ways. We talked about the first way, and that's choosing your own mix of investment funds. That's self-managing. That works for some people, but not for all. Another opportunity would be having a consultation through EY, and they can help determine that asset allocation and fund selection. And another way, and this is the way I invest, and there's about 79–80% of the folks in UMPIP using life stage investment management, and that places your account on autopilot, and it personalizes your investments based on your profile. And variables that affect your allocations, or an individual's allocations, would be the age of the participant, when you expect to retire. You're going to retire at 62, will you go to 65, will you go to mandatory of 72 for clergy. And then you can also determine the type of an investor you are. Are you conservative? Are you moderate? Are you more aggressive? So when you LifeStage will create that diversified investment portfolio. It will also rebalance your account whenever it's needed. And this is available for both active service and in retirement. You can also enroll in LifeStage at any time, and you can also disenroll at any time. To get started, you would complete the investment profile. If you don't complete the profile, you will automatically be put into the default, which it's important to know, it's important to complete it, because default might not match your wishes, might not match your plan. The default profile is moderate risk tolerance. You might be more of an aggressive investor, so that's important to make sure that you complete that profile. The default is also a benefit commencement date of 65. I know I plan on working at least until 67 because that's when I can begin taking Social Security. And then this provides in and check to see how your funds are performing based on your wishes. With LifeStage, it will rebalance anytime that it needs to. So that's why we call it that autopilot solution. And then I alluded to this earlier, Wespath.org has a ton of information. So there's no shortage of information on Wespath.org. These are daily funds, so the value changes daily. You can also get a detailed fund description, look for comparative results and benchmarks. That way you can compare the funds to apples to apples. So you're comparing the funds to like and kind. And then, as I said earlier, you'll also be able to see the fees for each of the funds. And then now I can pass this over to Frank.
Okay, thank you, Todd. I will.
We're heading over.
Yep. And we okay? You can see?
Yes.
Yes, we're good.
Okay, thank you. So Todd has reviewed the contributions that you have available to you, the investment funds that you have available to you. So you're contributing over a period of time. The accounts over a period of time are growing. History tells us over time they will grow. And then you'll have certain life events happen where you may be thinking about needing to take a distribution from your account. And we have distribution options available to you so that you can, depending upon life circumstances, take distributions from your UMPIP. The first two are distributions or withdrawals. What happens here is the IRS, for whatever reason in tax law, age 59 and a half is some special age whereby we can determine when someone can receive distributions under one set of rules and then somebody under age 59 and a half receive distributions under another set of rules. So if you're over age 59 and a half, you can receive your UMPIP distribution. It's an in-service withdrawal, as much as you need. Assuming it's a before tax contribution account for today's discussion, we will say that that money is going to be fully taxable. It's a before tax contribution. The contribution hasn't been taxed. The earnings have yet to be taxed. You take a distribution, they will be taxed, ordinary income. There really isn't much limitation on that. Now we have a financial hardship distribution. That is a limited distribution. It is limited in the reasons that you are allowed to go in and take that distribution, and it is limited to the amount that you can receive. And there's a tax penalty associated with that as well. So let's say you're looking to purchase a primary residence, and I did this. I took a distribution way back in the day to purchase a primary residence, but let's say you're looking to purchase a primary residence, pay for college tuition, maybe you have a medical expense or even a funeral expense. There's about 7 or 8 reasons why you can request a hardship distribution. You come to Wespath, you explain to us what your situation is, we'll ask some documentation, and we will go ahead and start processing that withdrawal. That withdrawal, again, for today's discussion, before tax, it'll be subject to ordinary income tax, but because you are under age 59 and a half, there's also a 10% penalty that is associated with that distribution. Also, we can only provide for you the amount that you need to satisfy that hardship, so the amount of withdrawal will be for that specific reason. Now, what we will do is we will roll it up, and understanding that taxes will happen, so that after the taxes are taken out, the net amount of your check is what you're looking for. But again, it's limited. whereas the in-service distributions are not limited, and the taxes are associated with those. And this is one of those areas that we'll get into more detail as the year goes by. Now, let's say you have a financial hardship type situation, but you have a cash flow situation where you don't need to take a distribution. Well, we have loans available to you, hardship loans. You can come into your UMPIP account. Again, certain circumstances have to be in place, and you can take a loan from your account. If the loan is used to purchase a primary residence, you can have that loan for 15 years. If it's for a general purpose, then you can have that loan for 5 years. You're taking the loan out of your UMPIP account, you're paying it back to yourself, and we apply an interest rate to it. We look at the prime rate, and then we add 2 percentage points to that, and that's the interest rate on your loan. So right now that would be 5.25%. The prime rate's 3.25%. But all of that repayment goes back to you, goes back into your UMPIP account. We at Wespath do not take any administrative fees or anything off the top. All of that goes back to you. So you can find yourself in a situation where you need a certain amount of money. You don't have to take it as a distribution. You do have loan options available to you. If someone is on long-term disability, they can go into their UMPIP account and take a distribution. It would still be subject to ordinary income tax, but because you're disabled, there is no tax penalty associated with that. You've heard about beneficiary designation several times. If something was to happen to you, your spouse, and there's an account that would go to your designated beneficiaries, make sure they're in good working order. If your career takes you in a place that you leave the UMC and you're not contributing any further, or your employer's not contributing any further into Wespath, then you could have access to that money here with Wespath, or you could roll that out or take a full distribution of that out. It's your account, it's your money. And then also come into retirement. There will be retirement options available to you, and there are several. In UMPIP, there are many options that are available in retirement for our retirees. Distribution choices. You can take a full lump sum if that is what you choose to do. And again, this is about planning, right? Financial planning, retirement planning. Full lump sum. You can take a partial lump sum, take a chunk of it out. Maybe you're looking to purchase a home in retirement or what have you. Later on in the program through the year, we're going to go into the housing allowance exclusion, and we're going to talk about some things to think about. We're taking those big amounts out of UMPIP down the road for those who are clergy persons. You'll be able to set up installments. You have this account, you're in retirement, you want monthly installments out of your account balances, out of your UMPIP. You can determine how much you want. And again, later during the year, you're going to hear about life stage retirement income, another program we have at Wespath where we will work and determine the amount of installments we can provide for you for the long haul through retirement. Or, maybe not all the way to 95, 96 years old, but for a good portion of your retirement, we will work with you and develop an installment plan for you. Way down the road, for those people who have attained age 72, and you have not begun to take distributions from UMPIP, the IRS says you now have to. It's called a required minimum distribution. And basically, it's a way in which the IRS is saying we've allowed you to tax defer for a very long time. We need you to start taking out some dollars as withdrawals per year so we can tax it and start to get that money back into the Treasury. And again, any remaining balances will be provided to beneficiaries. Now, as far as participant experience is concerned, we have benefit access. Over the course of I've been here a year and a half with Wespath. We've already made several changes to benefit access just in my time here. And we now have the new gateway. In the next slide, I'll kind of show you the presentation of that gateway. On benefit access, we have several tools for you to use and play with to determine how you are looking relative to your retirement plan. We have benefit projections where you can see at your benefit commencement date, retirement date, what would the different streams of income from all of your Wespath accounts and plans look like? And also we can provide you a retirement readiness tool where you can we can look at your Wespath stuff, and then you can tell us other things about yourself, other assets you may have, what you expect your expenses to be in retirement, housing, medical, and such. And then we just do somewhat of a gap analysis, and we determine whether or not there's an area of improvement or if you are in good shape. We'll talk about quarterly statements. And then again, we'll go back to EY Financial Planning Services. This is the new view for benefit access. It rolled out several months ago, and now we have these panels that tell you what types of plans that you are in. So we have the retirement area. For those who are in HealthFlex Exchange, you can see the health and well-being that's associated with that. And then for those who are in the comprehensive protection plan, you can also see your life and disability benefits. And then you can just continue to click and make your way into those particular plans and benefit options to see what is happening in those particular benefit programs for you. Again, we have projection tools that you'll be able to see on Benefit Access. And again, future quarterly ones we're going to do this year, we'll go deeper into how you can look at those. As Todd said, there's no shortage of information around investment information that's out there on Benefit Access. You can make your beneficiary designations there, and we have a lot of educational resources for you to take advantage of. Now, I'm kind of hoping that all of us today are already registered with Benefit Access, but if some are new to UMPIP or maybe just not using that much technology in your life, we would recommend that you go ahead and register for Benefit Access. You go to www.wespath.org, you're going to see this panel, you hit retirement benefits, and you're going to go to the new user registration screen. That arrow there tells you at the bottom, click on that for a new user registration. Hopefully this slide is clear for you, but basically we're just looking for information about you. What's your name, your address, your date of birth, your social security number, information like that. Are you married? We're going to want that information. And then what we will do is authenticate that you are who you are. So part of that will be, we're going to ask you to provide for us, and most often now it's a cell phone number, a means by which we can contact you with a code so that you can say, yep, I received this code, you put it into this authentication box, and then we know that we are in fact interfacing with you on Benefit Access, and then we will proceed with the initial enrollment or registration process. You set up your username, your password. Again, give us your cell phone for future authentication, because that will happen. This will happen each time you go on to Benefit Access. So we're going to want to make sure we have the right phone number for you. Down towards the bottom there, you may see you want U.S. mail delivered or electronic delivery. We default to electronic delivery, as most people now are just going on to Benefit Access, finding materials as PDF documents, downloading them, printing them if that's what they so choose to do. You go through that. You now have your new user registration confirmation, and you are on Benefit Access. Again, if you're not there yet, I encourage you to do so. If you are there, but you're not really using it that much, get on there, look around, don't obsess about it. It's a retirement plan, but navigate around. And certainly maybe one of the takeaways from today would be to take a look at what you have, how you're set up, and make sure it conforms to what your thinking is. We have quarterly statements available to you. Again, PDFs that are provided not long after each quarter end or by U.S. mail if that is what you so choose. And this is where you can see your account balances. So today we're talking about UMPIP. This is where you can see your UMPIP account balances. But for those who have MPP, you'll also see your MPP account balances. Those who may also have CRSP, defined contribution, the employer money, the DC account, you'll also see that here. For those who are in CRSP, you will not see your defined benefit formula or benefit calculated in CRSP, because it is a mathematical formula. So if you're looking saying, I don't see everything, you will not see that part of it, but you'll see all of the account balances that are there for you. You get extensive transaction detail, and now you can see the contributions that came in. If you have a loan, the loan repayments that came in. And for those who are in life stage investment management, where we are on that autopilot and doing that rebalancing Todd just reviewed, you may see a whole slew of transactions that you're not quite sure what they're about, and you didn't do anything to make them happen. And that's where you can see that rebalance actually taking place, what came out of what investment funds and what went into other investment funds. We have pie charts and tables and graphs, so we have different ways in which people can look at that, because everybody has their own way kind of looking at this type of material. We talked about EY Financial Planning Services a few times. This is a great program that is available to all of us at Wespath, and we encourage everybody to take advantage of them. Even if you're using your own personal advisor, it's not a bad idea to go in and just bounce some ideas off of the folks at EY, and then you can confirm that back with your advisor, a second opinion, if you will. They provide confidential, professional, comprehensive, household, holistic financial planning services to you. And it says at no additional cost. What that means is the investment funds that Todd just reviewed, they have a thing called operating expenses. So it's a percentage that comes off the fund that pays for our overhead. Part of that paying of the overhead is how we pay the fees for EY Financial Planning Services. So I'm not allowed to say it's free, but it's kind of free because we're all paying for it, but there's no out of pocket to you. And there's no limit to the amount of time you can use them, either number of instances of using them or duration of time. It's not like we're going to click over to a threshold and say, okay, now you owe us $50 an hour. That's not going to happen. What they also will not do is look at what you have, life insurance, other IRAs, whatever, and start pitching you on something they say is better. They're not going to do that. They will not do that. So again, it remains objective advice just for you and your household as you move forward. Yeah, wespath.ey.navigate.com is one great way to go in there, another web portal, but they have educational tools for you to use. You can get an idea of your own investment tolerance in terms of your risk tolerance. Are you a conservative investor, moderate, or are you aggressive? Those types of things are available to you. And then give them a call, make an appointment, and just start working with them. If you're a long way from retirement, get everything set up with them and check in with them periodically. If you're getting closer to retirement, certainly do more comprehensive planning with them. They can do a lot of sophisticated modeling and really look at cash flow situations for you, depending upon different things that you may be thinking about. So it's a great way for you to think about retirement plans and planning. They will help you with Roth contributions. Again, there's different things with Roth and different things with before tax we're going to get into in the June webinar, and they can help you think through decision making there. Plan investments. You want to self-manage, you want to use LifeStage. Even if you're using LifeStage, talk to them and get a good understanding of how you're positioned at that particular point in time. They can help you think about managing debt. You know, not all debt is bad debt. You're going to buy a home, that's good debt, but it's still debt and you want to manage it. You want to have an estate plan. You can talk about them, some ideas before you go speak to an estate attorney, so you're well armed to have that conversation. The less time with that attorney, the better off you are. If you want to fund education, your kids or your grandkids' education, you can talk to them about that. Basically anything that is financial in nature. Now, Bob and Todd on this call, coincidentally, over the course of the last couple of years, both called them, EY, to talk about getting a new car. Do they buy a new car or do they lease a new car? Just something very specific. And over time, they bounced off some ideas, they ran some numbers and helped them out, and they both came to a conclusion. Now, I think they both decided to lease the car, but either way, it wasn't something, you know, complex and broad. It was a very specific financial conversation they had with EY, and they were able to get some good direction to move forward. So again, great resource that's available to you. Todd mentioned that we are doing one-on-one consultations. You go onto that website down there. It's a little long, but it ends in 2021 benefit consultations. On that web page, that link, you'll see a date and time, 30 minutes. Go ahead and select that. One of us will get assigned to it, and then we'll get in contact with you, and we'll set up a video conference through GoToMeeting, and we'll talk to you about your benefits, your plans, any questions that you may have. It's not a one and done thing. If we need to go forward to another one, we're more than willing to do that. Spouses always welcome, and even financial advisors always welcome. I had one just yesterday with a financial advisor and a clergy couple. It was a great session. Last year at this time, we were really just kicking the tires on the idea, and then all of a sudden the pandemic hit. We did over 700 of these last year. We're already at almost 200 this year, and we haven't really gotten into retirement season yet. So it's turned out to be a great program. It's myself, it's Bob, and there's Todd there on that screen. So we encourage you to go ahead and do that. You don't have to be near retirement to have this conversation. You know, we do encourage EY, but having a conversation with us kind of arms you to really understand the types of things you might want to talk to EY about, types of questions you want to talk to EY about. So, you know, we think it's a worthwhile exercise. So really to kind of wrap it up, what are the advantages of participation in UMPIP? Well, you do have some tax savings that you can have now, before tax, later, Roth accounts and getting tax-free distributions in retirement, and a combination of the two. It's not one or the other, it can be both. So you have saving opportunities, investment opportunities, and tax efficiency opportunities. If you are in a situation where your employer is able to contribute money for you, either a matching or non-matching contribution, UMPIP can capture that employer contribution. We have the autopilot solutions. We've talked about a little bit about LifeStage Investment Management. We're going to go deeper into that in the next webinar. LifeStage Retirement Income, we'll certainly talk about that one, I believe in the third one in the September webinar. Sustainable investments, you know, how we invest is also maintaining and upholding the values and the principles of the United Methodist Church. So when we say sustainability, it isn't just about the long haul and the long term, which we've proved we can do, we're doing today, and have every intention of doing in the future, but it's also about current common issues and principles that we're seeing right now in the investment markets: environmental, social, corporate governance types issues. Wespath, I believe, is a leader in that and one of the pioneers in that space in the investment markets, if you will. And then you have EY Financial, which I just reviewed for you, a great service. These are just some of the advantages. I'm sure we'll be talking about other ones as we go through the year. So action planning, next steps. If you have not yet enrolled in UMPIP, you're here to hear it for the first time, we encourage you to enroll in UMPIP. Make your contribution election, the account election. Again, you can work with us, work with EY. We'll be talking about them in more detail down the road. An investment strategy, you have the funds, do you want to do it yourself? Do you want to use LifeStage? Get on benefit access. Go ahead. There's phone number 800-851-2201. Talked about benefit access. We've talked about EY Financial Planning Services. That information is there for you as well. So as I put up the required disclaimer, at this time, we'd all like to thank you very much for participating. We're going to come back on camera and see if there's any questions that Bob may want to share with us right now that's good for the entire audience. But certainly just kind of address anything that came up and how we may get back to you either in future sessions or through one-on-one type of consultations that we can plan with you. So Bob, if there's anything that has come up you'd like to share, fire away.
Thank you, Frank, and thank you, Todd. We did get a lot of questions that came in through the question functionality. I think we got to all of those questions. If we didn't get to the ones that just came in very recently, we'll go through the question log and follow up with you. You'll be receiving a follow-up email too, which will have a link to a recording if anyone wants to watch this again or wasn't able to participate live. We did get a lot of questions, Frank and Todd, about rollovers, what's eligible to roll over, and I encourage anyone that wants to seek some guidance from a rollover specialist to call our Participant Solutions Center at Wespath. And I put it in the chat, but I'll read it off. That number is 1-800-851-2201. A couple of questions came in. I know it was from clergy participants specific to the accrued benefit for the Clergy Retirement Security Program, CRSPDB. I encourage those participants to set up a benefit education consultation, and I provided the link to those consultations. You guys did a nice job describing that program, how it's really a one-on-one, kind of like this with cameras, private consultation, often with spouse. We can share screens, help you register for benefit access, help you run projections, explain the different clergy plans. Or if you are a lay participant and want to ask more questions about Roth or before or after tax or rollovers, we encourage you to set up a one-on-one consultation. I really think this was a great kickoff to our UMPIP quarterly webinar series, which is going to have a whole different look this year. And I just want to thank you all for participating. You know, at last count, we had about 325 people. So we know there is a need for this type of education, and we want to continue to support you through our different channels, whether it's our retirement team, taking care of those clergy that are retiring this July 1st, or our Participant Solutions Center for basic customer service type questions, or the benefit educators, or even EY Financial Planning Services. So thank you all for participating, and look forward to seeing you in a one-on-one consultation. Thank you.
Thank you.